Greetings and Happy New Year, everyone. If you like these videos, be sure to share them with your friends to help the channel grow. I'm CryptoSnake, back again to bring you some Bitcoin analysis. Today I want to cover some possible formations Bitcoin appears to be forming both on the short term and long term. Now, in my last video, I outlined the possible inverse head and shoulders formation on the daily chart, almost 2 weeks before any major market analyzers actually picked up on it. And we took advantage of this price movement in the VIP and scored some savage gains on the right side of the head and the left side of the right shoulder on the way down. But let's cover a little bit more about this formation. The right shoulder right now is becoming a little bit overextended, and if we don't pump in the next 2 days, we may actually invalidate this formation. So let's briefly cover exactly what an inverse head and shoulders formation is. It's the opposite of a head and shoulders formation. This normally forms after a savage dump, moving down into the left shoulder low, breaking up for a brief recovery, meeting resistance up here at the neckline. This looks a little bit better over on the BitMEX and Coinbase charts, but I'm just going to go ahead and show it right here for now. The head part of the formation moves down for a new lower low before finding support and leveling off, trailing back up to the neckline for the left side of the right shoulder before breaking down, coming back up again to test the neckline once again, and eventually breaking this neckline. Once it breaks this neckline, price targets could be seen all the way up to 5,500 or so, taking the size of the head and moving upward. Now, this right shoulder formation is still relatively in play. It is slightly larger than the left shoulder, very slightly, by a couple more daily candles. That doesn't necessarily invalidate it. In fact, the right shoulder can often be almost twice the length of the left shoulder and still stay in the formation. However, if the price stays down in this range of the 3,600 down to the support at 3,560 or so, it will invalidate that trend, especially if we start breaking a lower low around here. But let's briefly go into some indicators that are favoring the pump breakout from the inverse head and shoulders formation. Right now, the Chiku span is currently within the price. This indicates a little bit of ranging territory, which also makes sense why we are trailing sideways on this and forming the right shoulder. If the Chiku span breaks up above this price, that is very, very bullish, especially since we had a bullish TK crossover back here. However, the price has also fallen below the Kijinsen, so we do need a price break above the daily Kijinsen to confirm this formation. But the Chiku span is definitely moving in a bullish range right now. The Williams %R, which is the measurement of the bullish and bearish trend, when it's down here, it is down in the bearish territory and likely to start resurging into the bullish, and vice versa. This is the bullish territory, likely to reverse into the bearish. Because the Williams %R is now moving down into the bearish territory, this indicates we may have a little bit more dropping before finding some momentum to break us back up. As you can see, following the fear and panic dump, once this subsided and indicators finally fell back into the trend, we had the savage pump breaking up on the Williams %R back up, and then broke back down. We've been slowly consolidating in this area. The price has been relatively steady in this area, moving down into bearish territory. So if we strike down to around the 95 area, we are very likely to start a massive pump out of this and possibly into the daily cloud system. Right now, the Copic curve, which is this yellow line, which is just a measurement of the overall trend and where we are heading right now, is currently descending, which means the next direction for the Copic curve would be up, as we are going to level off somewhere and possibly start moving upwards. Now, the RSI, which is this purple line, the relative strength index, is also in no man's land. It has been relatively steady as the price has been dropping in this area, and it never actually went up to fully actuate the top of the 70 level, the overbought level, before breaking back down. So we still have plenty of room to grow in this. Now, if you've watched my previous videos, this whole indicator system down here may look a little bit different to you. I have customized it personally to acquire all three indicators in one. We have the Copic curve system, the RSI, and the Williams %R. This is just for simplicity for the video's sake. Now, the daily SAR is also declining, but the average angle of this is not that severe. So if this breaks up into a bullish SAR dot, we are very likely to come up and test this area. Now, this head and shoulder formation and these technical indicators, this is obviously the bullish scenario. So let's go ahead and outline the macro bearish formation that we're forming right now, which would be invalidated if the inverse head and shoulder actuates. So I've gone ahead and drawn out this triangle on the daily trend. This is a descending triangle formation. If this pattern actuates correctly, we will start trending through this descending triangle, start moving and squeezing up into this range before an eventual breakdown. A breakdown from this formation would very likely lead us down into the 1800 or so range, possibly 2200 to 1800, maybe even lower. But as you can see by the angle of this formation, it would take quite a while to actually actuate and get towards the end of this descending triangle. We're looking at least another month. This would put us into around mid-February. Now, as I said, as far as a bearish indication, if this holds and we break down continually from this area, it will be very, very easy to trade in this area and reliably expect a dump around here. But if the inverse head and shoulder actuates and we break up out of this, which would look like this, breaking up through the neckline and pushing upwards, this would invalidate this overall trend. Even though the bullish formation has us breaking up out of this daily cloud, I do expect that to be temporary, and we may still come back to test this support line at 3200 following that. And I will cover later in the video why I believe that is possible. My VIPs have been given exact targets for both of these scenarios, which we intend to capitalize on no matter which way the market swings. But before I get on with the rest of my technical analysis, if you'd like to join my free Telegram for insights on the market, including Bitcoin, altcoins, and a sneak peek to my personal entries and exits, join t.me/cryptosnakebit. Links directly to the chat and a link on how to install Telegram, which is a free chat program I use to communicate with my VIPs, in the description below. I've also launched my official Twitter, so follow me at CryptoSnakeVIP to get regular updates. The new year is officially here, and I've also given out a fresh batch of altcoin positions to ride for savage gains into the new year. I also give out hot altcoin swing positions every week to my VIPs, and if you want information on how to get into the VIP group to be part of these trades, the information is also in the description below. I've also released a brand new unique feature for my VIP elite, access to our automatic artificial intelligence bot, which automatically targets altcoins ready for a steady pump. I'll be releasing more information on this over the next couple of weeks as well. And I'm always happy to answer questions. If you have any questions, feel free to contact me on Telegram at officialcryptosnake. So back to the technical analysis. Let's go ahead and dive down to the 4-hour chart, where we can analyze another pattern that may be forming and could actuate today or tomorrow, which would be very lucrative to trade on. The first of which is the symmetrical triangle formation that's forming on the 4-hour. I've gone ahead and switched over to the BitMEX chart to show this a little bit better. This is what's known as a continuation pattern. The existing trend would be upwards, so the continuation here would be essentially a gigantic bull flag on the daily chart. However, on the 4-hour chart, this is shown more as a symmetrical triangle, which would lead to a breakout, breaking us up to around this range, around the 4200 test, which may spark the bullish momentum and a test of the neckline. So this is in favor of the inverse head and shoulders formation. Overall, this is a very bullish formation. Now, the other formation that we're forming on a slightly smaller time frame here is the descending wedge pattern. This is technically a descending narrowing wedge pattern, which is also just as bullish. It would include a breakout from this trend line up here as well. Both of these formations do act inside of each other, so this would also lead to a bullish breakout. However, the descending wedge would lead to a possible test down of the 3600 level before breaking down possibly even to the end of this area around 3580 before breaking back up. Now, what this would look like is a trending through this descending wedge before breaking up like that. Now, if we trade exactly through this and just continually side trend or continue downwards, this would invalidate both of these trend lines, and we may be looking at a further dip from this area. But currently backing up these formations is the 4-hour RSI, which came up to around this area. It did break down on the Williams percent R. As we continue trading in this area, relatively staying within the 36 to 3800 range, the Williams percent R has been consolidating. Now we are down in the bearish territory and expecting a pump out. We did have a very minor breakout, falling down to around 3650 before pumping back up to 3750, so about $100 range pump over the last couple of hours. So this is looking very, very good for a potential breakout from this area. Now, both of these formations are overwhelmingly bullish, and I am currently in a long position, as there is a distinct possibility that we will come up to test this 4-hour cloud before finding any resistance until around 3900. Also in favor of a breakout from this area is that the copper curve has started leveling off. This is entirely flat. This may start breaking up. The RSI is also starting to move upwards. I would expect a possible test downwards on the Williams percent R down into the oversold range before breaking back up. So we may see another dip down to test the 3650 level before spiking out and breaking out of either of these patterns. Now, while I am favoring slightly more bullish movement, I would say I'm about 65% bullish right now, 35% bearish. There is one looming factor that is very, very concerning to me right now, and that would be Bitcoin longs. Bitcoin longs have been aggressively overextended right now in this range. This normally does lead to a long squeeze, which results in a rapid price drop down. Now, just overviewing this really quick, we are moving up over into the overextended range, expecting a potential breakdown. The last time we broke down was on the 20th, which we saw a complete stop to the bullish pump on Bitcoin. So we may be moving for one of those now. The question is when this will actually actuate. If we go back to the Bitcoin chart, we can take a look here and see we could expect a violent pump up, possibly breaking the neckline even all the way up here to the 5500 range, breaking through the daily cloud before actuating this long squeeze. But when it does actuate, longs will be very, very overextended, and that price break would break us straight back down. Now, there is always the distinct possibility that we could have a very small breakout, test the neckline, and reject the inverse head and shoulders formation. It only has about a 75% success rate as a formation, so it is possible that it would break down. If we broke down early from that, we could definitely strike straight through down to the support at 3200 once more to test it. We may even wick all the way down through before bouncing back to this heavy support line. Now, moving back to the longs real quick, I just want to cover that we are moving up into the overbought range now, and moving over to Bitcoin shorts, which is the measurement of people betting against Bitcoin or betting that Bitcoin is going to drop in price. The Kopic curve is starting to ascend on this, and it is oversold on both the RSI and the Williams %R. So this could spike up massively as shorts. Normally when this occurs, a long squeeze occurs as well. So there may be a massive dump looming. Now, I want to cover a bit of news before I wrap up this video. If you haven't heard, Backed, which is one of the major ETFs, just had their first fundraiser, and they did raise $182 million, which for Bitcoin, kind of a drop in the bucket, but still very, very good news. It does mean that Wall Street definitely has an interest in cryptocurrencies, and it is becoming a lot more popular. So this is an overall bullish news. We do, however, have several important events coming up. January 3rd, 2019 also coincides with Bitcoin's birthday. Birthday events for Bitcoin normally result in a very nice price jump. However, there is also an event scheduled called Proof of Keys. This is an event, but it's probably better called a protest. A lot of major whales will be removing their funds from exchanges, and they won't be trading. They'll be putting them into private wallets. This is called the Proof of Keys event. They want to prove that their money is their money, and if they don't own their private keys, then it is not their money. So essentially, it's protecting traders from exchanges just taking their property, taking their cryptocurrency, as it is a digital asset, and it's hard to prove property with that. So what does this mean for the space overall? One, it is technically an audit of the exchanges to make sure that they actually have the cryptocurrency that they say they have. And second, as for price movement, they won't be selling their cryptocurrency, so it won't have an effect as selling pressure on the market. But what it does mean is that there is a lot less liquidity in the market. If everyone is storing their keys in wallets, it means they're not trading, and it would be the equivalent of the low volume days or the weekends. So we may see a lot of stagnation in the price, but more importantly, it would not take a lot of money to move the Bitcoin price or altcoin prices heavily in either direction. So on January 3rd, I am expecting a very low volume day, and I personally will not be holding any positions on that day, just in case of a massive jump, as the price could be heavily manipulated through that area. In fact, moving down to the 4-hour chart real quick, we can see these manipulation wicks here. The price drops massively, then right back up, price up, then right back down. The bots have been heavily trading in this area, so I expect no different on the 3rd, and they will be able to heavily manipulate the market during that time frame. So I will be closing my positions on the 3rd and remaining out of the market. My VIPs do have access to my personal exits and entries, so they know what I'm doing exactly. And they know I am planning accordingly, whether we break up and out of this into a savage pump or we break down into a savage collapse. So that's it for today's technical analysis. If you do make any trades today, I wish you luck. Please join me in my free Telegram at t.me/cryptosnakebit, where I give up-to-the-minute updates on Bitcoin and my personal exits and entries for the private VIP group. Also included is our private VIP chat, where you can chat with many of our experienced savage traders, get personal technical analysis from me, and answer any questions you might have. This is Crypto Snake, signing off.